It's Doug McIntyre, the editor-in-chief at 24/7 Wall Street, and I'm here with our lead economist, expert on corporations and stocks, Lee Jackson. We're not going to talk about stocks right now. We're going to talk about housing. So let me set the table. I want to buy a house. I'm a first time or second time buyer. Maybe I just got out of college. Maybe I got kids. I walk into the bank. It says it's 7%. Okay. Um, can people afford a house at 7%? What happens when somebody hits that sticker?
Well, if you talk to people who bought their first house in the mid to late '80s, they would say they would have killed for a 7% mortgage. But after 3 and 4 years of mortgages at, you know, I think the lowest was about 2.25 for a 30,
Yep.
and missing that on ramp, they may push back a little on 7. But if it's like your second home, I think that part of the buying public is probably okay. But for your entry level buyer, 7% may be a little bit tough, especially if the bank is asking for a big down payment or a substantial, 10%.
I was just looking at some numbers. If you're going to buy a house for $400,000, the difference between a 3% mortgage and a 7% mortgage is the difference between $2,500 a month and $1,700 a month. That's People think, oh, 3 to 7, it's not that much of a change. But when you look at a 30-year fixed mortgage, it's very, very meaningful when it comes to monthly payments.
Oh, absolutely. And especially when you consider in many places in the country, like where I live, north of New Orleans, insurance companies are raising home insurance prices because they're in flood zones or they're in hurricane zones. And for many people, that added uh, charge, along with just standard property tax, makes a $400,000 home is probably a little above entry level, but
Yeah.
let's say it's even 300,000. That's still going to have a pretty big cost to a first time buyer.
So people keep saying there are no homes for sale. And indeed, home inventories are very low level. I think this is the dynamic, but you tell me. Somebody says, I'm going to take a 7% mortgage and I'm going to buy your house, Lee, but you're sitting there with a 3% mortgage, which means you got
Actually,
to,
I am. So that's a perfect guess. Mine is 2.99.
right. So you're saying, well, if I sell my house and I have to buy another house, then I'm like the guy who's going to buy my house. My payments go way up.
Right.
Is that why there's this inventory squeeze?
I think that's a lot of it because this is kind of an anomaly we haven't seen in years. Even like you had mentioned before when we were discussing this, back to the real estate crisis, when buyers were unvetted, incomes weren't scrutinized, and rates were very low, and that exploded. I remember famously Barney Frank saying, "Oh, there's no mortgage problem, there's no housing problem" in 2006, 2007, and then it collapsed. So I think these kind of the rate hikes and jumps in such a short period of time. Remember, the 299 I got was just a short 2 years ago. So
Yeah.
I think you're exactly right.
For the first time, I think, maybe ever, in lots of the United States, people are moving because of the weather. I mean,
Absolutely.
really. So, do you think this migration, which is just starting, uh, from a place like Florida, where there's a lot of flood risk, or I don't want to live in Phoenix if it's going to be 100 degrees 90 days in a row. Do you think we're going to continue to see people leave places just because they're tough places to live? They can be unpleasant, and also your home insurance skyrockets in some of these places.
Absolutely. Now, I lived in Phoenix for 7 years myself. And while it is a dry heat, you're right. There's a long stretch from mid to late May till October where it is 95 to 100 every day. But yeah, I think there is a kind of an odd movement of people from Florida and other Gulf Coast areas, and perhaps up to Arkansas or Tennessee or northern Mississippi and northern Alabama, where you're still where it's moderate temperature wise, but you don't have the hurricane risk, or in some places, like California, earthquake risk. And I think absolutely there's going to be migration to places people wouldn't suspect, North Carolina, perhaps.
Well, my son lives in Malibu on the California coast.
That's beautiful.
Last 2 years, drought, 1,200-year drought. Now, record storms, massive flooding. These cycles are getting a lot more violent. And one of the things it's doing is this is making some people uninsurable.
It is. And the mere fact that many corporations, insurance companies, will just leave. There's where I live here. Now, again, we're not adjacent to the Gulf of Mexico, but we are adjacent to Lake Pontchartrain. And rates have gone up here dramatically. And that is going to price people out as well. And then the conundrum for those people is that rental costs have remained sticky and are at the highest they've been in years.
Right. I think that's right. There has been a interesting change in how people use their houses now. A lot of people would go home at night, eat, sleep, have breakfast, go to the office.
Right.
You have millions and millions of people who do not leave their homes. I occasionally see listings for houses where it says bonus room, home office. How much is that changing the housing market?
It's changing it like it's changing the commercial real estate office market, which is going to be dreadful, I think, going forward. And you have younger people, and I'm not so sure I could blame them, who worked from home remotely for 2 years. And they're like, hey, why do I have to go into the office? I can work from here, and I got all my work done, and I can Zoom with somebody. And while many corporations have said, no, you will come back to the office for 3 or 4 days because that interaction is important, for workers. But I think you're right. I think it's huge, and people are wiring their homes for faster wireless internet. And I think it's a big factor.
So as we sit here right now and you look out 2 years, housing prices have gone up pretty steadily for a decade.
Absolutely.
A couple pullbacks, but nothing that's really large. Does that continue for 2 or 3 years? It's just sort of relentlessly goes up.
Given the unique situation we're in, that could be the case. It's interesting because here, my cousin is a real estate agent here and in Boca Raton, Florida. He has his business here, and then he went to Boca and opened there. And they're having success, but for people that are very affluent, and I know, and we've written about this for years, they don't care. They don't care because it's not an issue to them. But the affluent, although they pay 45% of all income taxes, they can't support the system themselves. And when medium income and even lower income, but more medium and medium upper middle class, for lack of a better term, when they start to tap the brakes, then I think the industry has a big problem.
If you think about housing, and you think about the Federal Reserve's people thought, well, they're going to bring rates down because inflation's coming down. We look at the new CPI and inflation isn't coming down. Does that mean mortgage rates around 7% could stick for most of the year?
Oh, absolutely. Because this last CPI number is pretty clear that any hopes from the futures market that there's going to be a rate cut in March, of course, is totally off the board. And it looks more and more, especially with oil prices increasing again, WTI going back towards the $80 level. I don't think they can raise. They likely don't raise in the summer. They could wait until the fall, and then it's going to be, what will 25 basis points do? Nothing.
Nothing. Let's turn for a second to who wins in some of this housing movement. Would you like to be the head of Home Depot right now?
Well, from the do-it-yourself standpoint, I guess I'd also always like to be the head of Home Depot, but I think that it could be advantageous for the big box shops like that, because people might opt not to go to that second home. They may say, well, let's add another room, or let's redo the bathrooms, or let's do something to spruce up what we have. So it may be beneficial for big box stores like Home Depot and Lowe's and companies like that. But I think at the end of the day, I think you're right. I think rates could be this high or higher 6 months from now and a year from now.
I certainly live in an area where housing prices have probably gone up 50% in, say, 5 years. Now, you owned a home in Hawaii.
I did.
Why did you sell it?
Well, it was interesting. Hawaii was totally shut down during the pandemic. And my place was in Kauai, which is the farthest island out, and ours was on the North Shore. And we had bought a bigger place in 2019 because we were either going to, thinking about moving out there, but probably spending, hot Louisiana summers out there. And not that it isn't warm in Kauai, but there's trade breezes and all that. And I started noticing the prices skyrocketing, and they just went up and up and up and up. And the more people I talked to, and we had real estate friends out there, said that if you were a web code designer, if you were a web designer, if you were a coder for Google, anybody in Silicon Valley, you could move to Hawaii and sell your 1,200 square foot home, in Santa Clara or something like that for $2 million and buy a much nicer place in Hawaii. And the prices skyrocketed. I literally, our place out there was up 75% in 18 months. So I sold it.
So you sold it. Well, we're going to leave this on your happy news, which is that you got like a 75% increase in the value of your house. And almost
well, a good chunk of that went to our friends at the government, a very good chunk.
Right. So in the blink of an eye, Lee Jackson had one of the great real estate experiences of the last 3 or 4 years. We'll leave it at that. Now, we'll be back to see each other soon.
I look forward to it, Doug. Thanks a lot.